Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, September the 2nd, 2016. It is non-farm payroll. We had news come out about 15 minutes ago and has spiked pretty much everything. It is Friday, September the 2nd. It is Labor Day weekend. It is a holiday weekend this weekend. So I expect the volume to drift off near the end of the session, and most of the people with the better seats to leave and go on vacation for the weekend. We have holiday hours on Monday, so the regular market is closed. They believe the futures market closes at I think 12:30 Eastern. But I will not be around. I'm taking my daughter up to university on Monday. Anyway, this is a subscription room. If you're interested in checking us out, you can send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. We do this live every day in a go-to session, and then we do live trading and analysis during the market hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday. Yesterday, our main hypothesis, which hasn't changed much, was an open auction in range, a move down, and then finding buyers somewhere down in the value area low, and then rotate up and out of value and take out the naked VPOC at 73.75 and continue up and take out the overnight high. Hypo 2 was a failure to break out or a false breakout, and then a rotation down and a move down through value and range, and a move down to take out the 21.53 and a quarter or 75 naked VPOC down here. Well, Hypo 2 played out early, did not quite miss the naked VPOC by 4 ticks. We got this little head and shoulder pattern that set up that got us into the long. We also had a FUBAR, Mr. Sneaky. There's the FUBAR. There's the Mr. Sneaky. The tech gap you don't see because I don't have a 9 EMA on this particular chart, but it was there, and we got long off of that. And then we had a double Renko reversal that set up as well, with the entry on the second bar open at 57, and I tried to get an add-on at 57, and it did not pick me up. And then we had the third bar close on the Renko, and after that I don't try it. And I could have tried to take it here, but to me, once the move has been made up to the primary target, the trade is done, so I won't take it on the retrace. And then we had this strong move up on that news, and basically once we got back up into value, we basically traded inside value for the rest of the day and closed right at the 66 and a quarter, 67 area where we have that CHVN. Taking a look at the news, we had Canadian trade balance came out at minus 2.5 versus expected minus 3.2. We had labor productivity month or quarter over quarter came out minus 0.3 versus 0.2. Average hourly earnings came out 0.1% versus 0.2 for the U.S. Non-farm employment change came out at 151 versus 180. This was a bit of a miss, but we had unemployment rate come out just pretty much as expected, and just on as it was the last time. And then trade balance came out at minus 39.5. So even though we had employment change lower, this is good news for people trading, because it gives less likelihood that we're going to see a rate hike in September now. So I think we've got a Fed off right now. Let's just step back and take a look at where we are in the big picture. I start with the monthly candlestick chart with the 9 EMA, 20 SMA, and I use slope and separation to give me the strength of the trend, where the trend is being challenged or violated. Beautiful trend up for the last several years, challenged the end of 15, beginning of 16, and then we've got continuation up, and we're starting to get slope and separation on the 9 and 20 again. On the weekly, we've got this Andrew's pitchfork. This is a modified shift. I use modified shift for most of my forks. You can see that we're still trading in the upper distribution, in the upper channel. Move down to the test the lower channel will take us down into the 30 area, 30-40 area, and a move up will give us a new all-time high. But we're just sort of going sideways. We do have slope and separation. We're holding the 9 quite nicely. We tested it beginning of this week and bounced off of it, and so far we've got a continuation pattern, and we're just got back above 72.50, which is a key CLVN, and coming back up into balance into that upper microcomposite. Going to the daily, a little bit of a different story. We see some weakness coming in. We're getting some consolidation. We had this this downtrend going on the daily, and we just challenging it right now, trying to get above the 9 and the 20 with the move above the 73, 75. So if we could hold this, we could possibly get a challenge to what was the start of a downward trend on the daily. On the 4-hour, it was much clearer downtrend, and we just took it all back on the news, and we're back above the 9 and the 20. So more consolidation coming into the intraday. Going to the 1-hour, same thing. We were in this consolidation, and bam, we spiked up, took out this naked cross right here, and coming up and challenging this fractal high up here at the 77.25. Going to the 30-minute, same thing, consolidation, news comes out, bam, we're back up, back in this consolidation area up here. Going to the 15-minute, we have a double top on the 15-minute. This is a week, created a week high at 75. We're trading 3 ticks under it. We're likely to put in a new high, Globex high, coming into the RTH session, but we have created quite the technical gap, so I'm expecting either consolidation and chop in this area and have the 9 EMA come up to close the gap through time, or I'm expecting a bit of move back, and somewhere I'd say somewhere probably in the 72 area is where we end up closing this technical gap that we've created on the news. You can see it much greater on the 5-minute. There's the 5-minute, and you're starting to get the consolidation and a move to close the technical gap on time. It's unlikely that we're going to get a big move down to close the 15-minute gap by time. Now, we do have the scene of the crime, the non-farm payroll. Scene of the crime is 2165.75. So if we get below 72, that's going to be your key target. We've got several naked crosses to note that were created on the news. We've got this one right here. This one is at 2167.50. And then on the 15-minute, there's our new high put in. Got one here at 67.75. And go to the 30-minute. And we don't have one on the 30-minute. So we have 2 naked crosses, and those are right back at the microcomposite VPOT. All right, so let's get rid of this. So most of the time frames, the trend is up or consolidation. So here's the bigger picture. So we have these, let me just get rid of this. I don't want people to get confused here. Okay, so here's the big picture. Okay, we were just testing down here yesterday. We came down again. We did not bounce off the 59.50. We bounced off the 54.75. My thought was it would be off of the 53.75 area. Missed it by a point. Sue me. The market's going to do what it's going to do. But I said if we came down here the next time, it's likely we'd come down and test a little bit lower because we'd already been down here twice to pick up buyers. But they have found buyers on the news, and they've moved us up, and we're above the 72. Now, right now, we've got this. I've adjusted the microcomposite into 3 now. The reason being is I wanted a clearer definition of where the value was up here on this microcomposite, and that starts at 73.75, and then the value area high from the balance that we just bounced out of is 67.25. So we have this area between 73.75 and 67.25, and this is centered around the 6-day microcomposite that I've got, where we've got a microcomposite VPOC at 70. So this gives you a target between the 67.25 and the 72.50 to shoot for if we break back below or we're down and we break back above. So the reason why I have the 3 profiles is for this particular reason. Where true value is in this microcomposite, where true value is in this microcomposite, and then where the price acceptance is between those two values. So 72.50 still remains an important level for us. We're back up inside of the value right now, trying to hold above it. We're 1 point inside of value, so pay attention. If we hold this value, then we should continue to drift up, take out or put in a new overnight high, or take it out, and then keep moving up towards the 77 and 79.25. But if we get below 72.50, start targeting the 70 with the big target being 65.75, return to the scene of the crime of the non-farm payroll news. So key levels, 79, 77, 67.25, and 59.50 for price acceptance. Price rejection, 72 and 65.50. Our key line in the sand above is going to remain at 86, and our new key line in the sand below is 49.25. I'm not using 72.50 as a key line anymore. It's still going to be a trade level and a CLVN, but it does not define the bigger move anymore because we've sliced through it and the context has changed here. So I know that's a little bit, a lot to digest there, but I want you to understand why these are drawn for the reasons and what the levels really tell us. So taking a look at what's happened overnight, you can see that most of the night we were in balance around yesterday's VPOC. We just sort of chopped around in a very, very tight range, and then we had this nice little move down prior to the news. FUBAR, Mr. Sneaky. You can see the volume spike here, and then we got the Mr. Sneaky inside bar. Entry bar was right here, and the move up to close the gap was up to the 66.25, and we just then closed the gap, we were chopping around, and then the news came out, and we got a nice, beautiful, 10-point move off of that non-farm payroll news. So we have now created a double distribution, and the double distribution starts at the CLVN or the LVN at 71.25. So we've got to put an LVN here at 71.25. It's kind of a bit of a wide range gap, goes from 71.25 down to 69.75. But the number I'm going to be using is the 70.75 because of the fact that it is the value area high from yesterday. Our overnight low is 64.25. Don't think that's going to change. It just happens to be at yesterday's VWAP. Our current high, which could change, is at 75.75. Just above that, one tick above that naked close. Even though we've traded in the Globex and taken out or traded the 73.75, the naked VPOC remains open, okay, or remains naked until it's traded during the RTH session that it was created in. So we would expect that the 73.75 is going to get taken out at some point in time today. The overnight VPOC could shift, but I don't think it's going to. So it's currently at 67, one tick above the naked VPOC from yesterday's RTH session. And that's about all the information that we have for the Globex session. So let me just move this out of the way. Expand this back out. All right, so let's start taking a look at levels. Obviously, the 70.75. I'm not going to use the 72.25 as a trade level. It's sorry, 72.50. It's important to me, but because of the fact that we've got the range high at 72.25 and the prior day range high at 72.75, I really think that the level is going to be right on top of this naked VPOC at the value area low of the microcomposite. So I'm actually, and I don't do this very often, but the context is there, I'm going to use 73.75 as a trade level. It's going to be a target and a trade level. And then looking at our levels above, we've got, obviously we've got the daily upside ATR target. Daily ATR target right now is, or daily ATR is 14.25. So off of the low, our upside daily ATR target is 78.50. That's basically right at the little CLVN that we've got between the 79.25 and 77. I'm going to target 77 in front of that. And I'm going to use this as a trade level, and above that I'm going to target the 79.25. And then we've got this 81. What was that 81 from? That was the range high from the 30th. So that will remain. And then we've got the microcomposite value area high at 83.25. And then our key line in the sand is the other side of the balance. And the 86 and above 86, we're going to target. This is no longer needed. We're going to target 87.25. And the 90, and then our all-time high at 91.50. And then let's just take a quick look at our flex levels, see if there's measured moves up here. We have a measured move at 94. Target 94. And then there's another one at 2209.75, which we've got. Our weekly ATR target is up at 2208. I just want to make sure that that's correct. I might have accidentally moved that. Let me just check the weekly here. So the low on the week is 54.75. It is going to change. 21.54.75. Our weekly ATR is running at 48.6371. So it's 2203 and a quarter. That's our weekly ATR upside target off of the high, which we just put in for the week, I believe. No. Our high for the week is 82 and a quarter, 48.6371, 2133. So I think that the weekly ATR is going to be a non-event. And we've got it down there. Okay. So those are our upside levels. Let's just take a quick look at what the downside levels are. Obviously, below the value area, the target is the naked close, the naked VPOC, the overnight VPOC, and the non-farm payroll scene of the crime. Don't need this anymore. There is a trade level at 65.75, so this is a trade level. I'm just going to mark this here. And trade level. And then below that, we're targeting the overnight low at 64 and a quarter. And then we have the value area low here at the LVN from yesterday's double distribution and the daily ATR target just below it. Target below that is going to be where the VPOC was most of the day, which was down here in the 58 area. There's the CHVN at 59.50. You could target that in front of this, but I'm going to use the HVN. And then below that, there's not a lot below until we get down to the 54 and 54.75, and of course below that we're targeting 53. And then our key line in the sand below is 49 and a quarter, and then all our levels remain the same. So those are our levels. How are we going to trade it? Did we put in another new all-time Globex high? Yes, we did. 76 now, and we're liable to continue to push again, and that means that our downside ATR is going to move up one tick, and we'll have to keep an eye on it. I'm running out of time here. I'm going long. I know I'm going long. Okay, so right now we're trading in the 75s. We're going to be opening up out of value, out of range. So I'm expecting one of two things. Well, one of three things. I'm expecting an open drive. The first thing I'm looking for is an open drive. There's going to be those that overnight are caught net short, and they could get squeezed. And therefore, anytime we open up, especially when we've been one time framing down on the longer time frame, on the daily time frame, we have to anticipate the possibility of an open drive. So watch for the open. If you see an open drive, don't try to fade the open drive. We're going to get a tick gap up. Do not try to trade that tick gap, because it will give us a high tick coming in here, and these type of tick gaps are bad because of the fact that you can get an open drive and they just keep driving. So so that's one possibility. The second possibility is an open test drive where we take out the overnight high and come down and test the range high or the 73, 75 and then get continuation. So my main hypothesis today is an open auction in range, or sorry, out of range, a move down, find buyers, okay, somewhere between the 72 and the 70, 75. Hold on one second. Sorry about that. So Hypo 1 is an open auction, out of range, a fairly choppy open, a move down into somewhere between 73 and 70, 75, find initiative buyers and rotate up and come up and hit our main target above, which is going to be up here at 79 and a quarter, and then I'm expecting basically chop into the rest of the day up in this microcomposite value area. Hypo 2 is an open auction out of range, a push up, and somewhere between 77 and 79, find responsive sellers, and then rotate down, chop around at the range high, and then push through down into the 67 and chop around the rest of the day in the value area from yesterday. Hypo 3 is an open drive, a push up into the 79 chop, and then get continuation, come up and test the 86, chop around there, and then go and make a new all-time high and take out that naked VPOC at 2190. And then Hypo 4 is an open auction, out of range, a failure, push down, chop around in the 67, and then fail and come down and come down to the 53.75. I think Hypo 3 and Hypo 4 are less likely. I think we're going to be somewhat range bound today because of the holiday, although we could get into a holiday drift on low volume, and that would favor Hypo 3 if that happens. But Hypo 1 and Hypo 2 are my main two hypotheses. We're currently trading above the Keltner center line, which is at that 72 and a quarter. A move up to the upper Keltner line is going to take us up to the 78, 79 area. A move below the 72, a test to the lower Keltner is going to take us back to the scene of the crime at 65.50. I know it's a little bit long-winded. We're running out of time, so I'm going to stop it there. As always, trade well, trade safe, and we'll catch you on the flip side.